Alright, hi everyone, this is Dylan again. Welcome to my daily trading analysis video. Today is a Monday, 6th of October. So the very first currency pair we're going to look at right now is the pound against the US dollar. Alright, so this is a, right, we shall just go to the weekly charts. So this is a weekly chart. We can say that last week itself, price has broken and closed below the 200 moving averages. Alright, so over here you can see. Oops. Alright, next is that we just a quick recap that the resistance that the 200 moving averages is a strong resistance back then, as you can see over here, and finally right now it has become a support, but then it failed to support and price broken below, and therefore we can say that price is prone to fall even further. Alright, so the next support level that we might be able to see is the price of 1.5716, and finally to the level of 1.5321. Alright, now coming back to a day one chart, or probably the 4 hourly chart, we can see that there is a, well, let me just remove this. Right, so this is a 4 hourly chart. We can see that there is a falling trend line over here. Alright, and probably a very minor falling trend channel as well, but then the price has broken below this trend, this falling trend channel, so then the price might fall even further. And of course, to take note that price has also broken below the sentiment figure of 1.6000, right? This is where it is, 1.600, right? As well as it has also broken the previous low of 1.67 back in September itself. So we can see that price will depreciate a little bit further, but right now we might be expecting some retracement, as we can see exhaustion over here. Alright, so that's the thing. We shall just wait for price to retrace, probably back to the price of 1.67. Yes, and you might just want to plot a retracement level and wait for price to reach any of the retracement level, to the 23.6%, the 8.2%, or even the 61.8%. So yes, just wait for retracement and look for a short opportunity. Alright, so next we're gonna look at New Zealand dollar against the US dollar. Well, similarly, we can see that there is a falling trend line all the way from the high itself, and we see the price has been just falling further and further away from the falling trend line, and price has reached the previous low in September itself. This is also a previous low back in 2013 June to July. So then again, what we can do is to wait for retracements, probably to the price of, well, just a minute, to the price of 0.7970. Right, that's a retracement level of 23.6% as well. Or the next level will be the 38.2% level at the price of 0.8138. Alright, so then again, there's nothing much to do. We will just wait for price to retrace from here. Alright, so next we'll look at the Australia against the US dollar. Similarly to the New Zealand dollar against the US dollar, price has reached a previous low back in 2014 January. Alright, this is a daily chart. Zooming into the 4 hourly chart itself, we can see that price is attempting to rebound, and therefore we can wait for a retracement as well. So this over here, I have plotted a Fibonacci retracement level. So the very first level, the first retracement level we're going to look at is at 0.8820, the Fibonacci retracement level of 23.6%. If not a little bit higher, will be the 0.8931 level at the retracement level of 38.2%. That is probably where the 200 moving averages will will touch as well. Alright, so this is for Australia against the US dollar. Now back to the dollar yen. Well, dollar yen, as you can see that the strength of the price is not that strong anymore in terms of appreciation, especially when it reached the sentiment figure of 110. So what happened last Friday is that price has depreciated all the way to 108.05, and then it appreciated again because of a strong US employment data. But however, that itself did not help to bring the price higher, or to break above the price of 110, and therefore price is still below the price of 110, and we are seeing that price is about to retrace. So again, what we can do is to wait for price to retrace, probably all the way back to the support level 108.44 or to 108.05, or rather the region over here, the blue color, the highlighted area over here, before wait for price to reach to rebound or to appreciate further. Alright, another thing to take note is that Japan itself, they might be not that inclined to weaken the yen any further, because a weaker yen right now, especially to a price of 110, has weighed pretty heavily on consumer spending, because import prices has become a little bit expensive. So things for goods and stuff like that are all a little bit too expensive for consumer to spend on it. Of course, that is also being affected by a sales tax hike back in April itself. So we might be seeing price to retrace a little bit further before we can go for a long opportunity. Alright, so that is all for the dollar against the yen, and finally we have the euro against the US dollar. So then again, we can see that the euro against the US dollar has made another low, has broken another low all the way, and got supported at the price of 1.2500. Well, so this is another sentiment price, so what we can do here is to again wait for retracement level. Alright, well, the euro has actually this is the forward chart. Alright, look at the forward chart itself. This area itself is where euro has a retrace, because during a conference, the president of European Central Bank, Mr. Draghi, has failed, or rather has disappointed the investor by not providing enough information on how what is the amount of asset purchases, and that has caused euro to strengthen a little bit. And then again, during the US employment data itself, it has the US dollar has strengthened so much against the euro itself, and therefore price has broken a new low to the price of 1.2500. So right now we will just wait for retracement level again. Stochastic has already suggested oversold as well. Alright, so that is all for the euro against the US dollar, and of course that is all for today. So thank you for watching. I'll see you again.